Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So right now, if you're looking at the stock market, you might be thinking everything is too expensive, there's no opportunities out there. However, there are some opportunities out there, and I'm going to show you 5 different companies today that are dividend paying companies. I also have non-dividend paying companies coming up inshallah soon, so high growth kind of companies. So stay tuned for that one, but today we're going to focus on 5 different companies that are right now undervalued, okay, according to Morningstar and their valuations. Before we do that, please give the video a like, subscribe to the channel, let me know if you have any questions. It really helps the channel, obviously. And the other thing I would like to say as well, if you haven't joined us on the Discord and the Patreon account, please do so. You get access to all of these things, okay, including the Sharia compliant investing ebook if you like. So you got a lot of little things that you can get out of this, as well as obviously joining the community inshallah. What I'm trying to do here is not to show off basically how much money I've got or anything like that. What I'm trying to do is kind of inspire hopefully some of you out there to start investing in the stock market and show you exactly what basically is doable if we focus on the long-term plan, okay? And that's really the most important thing. I'm going to answer some of your questions tomorrow inshallah. I'm going to create and do another video tomorrow or next day, this weekend inshallah. But some of you have seen questions about, like, if I invest £10,000 today, how much am I going to make by the end of the month? Well, that type of question, if you are that type of basically person, then you basically investing in the stock market is not for you, because you're going to lose a lot of money. That's not the right mentality. The right mentality is buy and hold quality companies for the long run, meaning 10, 15, 20 years or so. Be patient, invest regularly. Don't worry about the noise and what's happening in the markets, whether it's going up or down. Buy quality companies that you know the products and so on. You know they're going to be around for a long time, and then focus on that. Don't worry about what basically else is happening around us. And that's really important. So what I'm going to do today is I'm going to show you 5 different companies. If you're interested in any of these companies, obviously go away and do your own research. But don't take this as a basically investment advice, because I'm definitely not a financial advisor. As you can see, the portfolio has come down quite a bit in the last couple of days. So from, I think it was about in the 80s, okay, 80 something, to right now in the 70 something. So it doesn't matter, 79 something. So it doesn't matter to me whether it goes up or down. I still add the money that I need to add. I still buy quality companies, and I'm gonna share this with you guys as long as I basically can inshallah. Okay, right, let's get started with the 5 stocks. So the first company we look at today is NXP Semiconductor. This company is obviously in the semiconductor company. It currently has a market cap of $55 billion. It has a narrow economic price is right now $206 per share. They do pay dividends, so 1.96, almost to 2%. Payout ratio is only 26%, so that means they can increase this dividend for going forward. And latest increase was 20%. They don't have a 5-year growth rate because they have only been paying dividend for 4 years. Annual payout is $4.06. Safety is 60%. Okay, profit margin of 21%. Return on equity of 36%. Free cash flow 2.46. This is one of the most important things that I look for when I'm looking at a company, because this is what the company uses to pay off any debt, to reinvest in the company, to pay off dividends, to acquire other companies. They do a lot of money, basically a lot of things with that money. Okay, so it's very, very important, especially right now when the interest rates are very high. You don't want the companies that you're on borrowing money from the bank with the 5%, whatever but the rates are right now. Total return in the last 10 years for this company has been about 20%, which is decent. So that means your total return, including dividends as well as price appreciation, you would have made about 20%, okay, on average every single year. Growth estimate for the next 5 years, basically they expect, the next year they're expecting about 9%, and after that 8% every single year going forward. And right now, according to Morningstar valuation, not mine, okay, Morningstar valuation is not something I've done. This comes from exactly from Morningstar website. That's about 11% discount. $240 per share is where the price is at. Should be. Now let's have a look at the earnings for this company. So if we go to earnings and we go to estimate going forward, okay, you can see this year, so according to Seek and Alpha, okay, they're thinking basically 2023 it's basically down. but then after that it's about 10%. So this is what we've just seen there. So that 9% there is basically what you see here. Okay, that 9%. Then 2025 onwards is about 10%, 7%, and so on. So that's basically what they're thinking. In terms of the revenue side of things, you can see this year's almost flat. Next year is 5.6%. Next the year after, if we only focus on the first three, the year after is about 6%. Right, let's now have a look at the second company, and that is AstraZeneca. That's a company that I own in this portfolio. I'm using the US version of this company because I found it easier to find information on the US trading, basically tickers, than the UK. Although I can use Simply Save Dividend, Simply Wall Street, I prefer this. Okay, so right now this has a market cap of $220 billion, a wide economic moat. $70 per share is where the price is at, and then dividend yield is about 2%, just above 2%, which is really nice. Payout ratio is only 41%, and latest increase was just 1%. The 5-year growth rate for is just 1%. So this comes from Simply Save Dividend. This cannot be accurate. So this is what I do. Although I'm talking about the UK version, I always use a Dividend Max for this for UK based when it comes to dividends. And as you can see here, Dividend Max is actually, I think the last 2 years they have kind of increased it. Okay, the dividend streak of 23 years, so they have been increasing that for 23 years according to Simply Save Dividend. Annual payout is $1.42. Safety 70%, profit margin of 14%, return on equity 17%, free cash flow $6.56 billion. Total return the last 10 years we're looking at about 13%. Growth estimate for next year is 17%, and then 14% every single year after that. Now 4% discount right now, $74 per share is where it should be. Right now it's about $70 per share. So if we then look at this company, okay, in Seeking Alpha, we're looking at earnings estimate going forward. You can see about 10% this year, then 16%, 19%. But again, there's not a lot of analysts looking at this company because they're not really interested that much. But again, if we look at the first basically 5 for this company in terms of revenue side of it, 3%, 10%, 7%, 6%, 4%. That's basically decent, from $45 billion to $60 billion by 2027. So it's growing really fast, which is quite nice to see, and it seems basically discounted right now. The next one is another one that I own, that's Public Storage. Right now the company has a market cap, this is a REIT, okay, real estate investment trust. It has a loads of storage places in the UK, basically in the UK, in the US, and around Europe and so on. Basically right now 50 billion market cap. It has a in terms of economic moat side of things. Price right now is $284 per share. Dividend yield of 4.22%, so it's quite nice and high. Payout ratio 70%. Remember, these companies for REITs payout ratios are normally quite high, up to the 90%. Latest increase is 50%. 5-year growth rate basically 0 because they recently actually reduced their dividend. Dividend growth streak is 0 as well. Annual payout is $12 per share. So every stock of this company that you own, you get $12 per share. And then safety is 96%. So there you have no issues with the safety side of it. Profit margin 92%. Return on equity 71%. $2.8 billion of free cash flow, which is nice. And then about 9% growth in the last 10 years. They're expecting the earnings to grow about 5% according to Yahoo Finance, and growth estimate for the next 5 years we're looking at about 17%, which is really huge for this company. And 10% discounted right now, $317 per share is where the price should be. If we then go back to Seeking Alpha and find the company earnings estimates, and then we look at this year about 5%, then 5%, then 5%, then 1%. So if we focus on the first 3 again, 7%, and then 6%, and then 7% as well going forward. So again, a decent growth there, and then you get the dividends on top of that. Next company is Skyworks Solutions. This is in the semiconductor company, 17 billion market cap. It's quite a small company, narrow economic moat. At one point, this stock was trading closer to, I think it was about closer 150 to 200, I think, around that time. Around the 2021, it was very expensive. But right now, as you can see, it's $107 per share. Dividend yield of 2.3. Payout ratio is 26%. Latest increase about basically was about 10%, 5-year growth rate of 15%. So dividend side of it is really good. They have been increasing this dividend for 8 years in a row. The annual payout is $2.72. Safety 68%. Okay, the highest you can get is 99%. Profit margin of 21%, return on equity of 20%, free cash flow $1.4 billion. Total return in the last 10 years, you would have made between dividends and price appreciation about 18% every single year. Growth estimate for the next year is about 10%, then 15% after that every single year. 31% discounted right now. $155 per share is basically where the price is at. Now, if you're enjoying the content and you're enjoying the video so far, please give it a like because it really helps the channel. If you haven't joined us on the Discord, do that as well. Now, this year, as you can see, a lot of the semiconductor companies are not doing well. Obviously, this is 2023, but after that, it's about 7%, and then basically 17% from there onwards. Same goes more or less when it comes to the revenue side of it, from $4.7 billion to about $5.46 billion in 2025. So it's kind of also heading the right direction there too. Final company is Teradyne, another semiconductor company. It has basically the current market cap is $16 billion. So it is actually, again, another small one. Currently, it has a wide economic mode. Price is $104 per share. Dividend yield, very, very small. Payout ratio is 13%. Latest increase was 0%, and the 5-year growth rate of 9%. The dividend growth rate is only 1 year, so they've only increased it for this year. Annual payout, basically, you get about 44 cents. Safety is 74%. Okay, which is fine. Profit margin 25%, return on equity 30%, and they have some small free cash flow. Remember, it's only $16 billion market cap, so they have $462 million basically dollars. And total return in the last 10 years, we're looking at about 21%. Growth estimate for the next year is 61%, which is huge. We'll check what Seeking Alpha says. This comes from Yahoo Finance, obviously, and they basically obviously get that information from different analysts, and then they kind of average out. So we'll look at Seeking Alpha, which does more or less the same as well. Growth estimate for the next year, they're expecting about next 5 years, they're expecting about 11%, 31% discounted right now. $157 per share is where the price is at for this company. So let's go back and check the earnings side of things. And as you can see, this year a lot of the semiconductors are companies are more or less the same, but 2024 we're looking about 55%. Look, so we're saying here, they're saying basically 61%. These guys are saying about 57%. Let's call it 58% growth in terms of EPS. So I don't know why this is huge. Sometimes what happens is companies buy other companies, and then they obviously make that company part of their company, and then a year or two when they basically started the two companies become one, then obviously the EPS jumps massively. So this is not because they may be just growing. It could be that they've been some accusation, and for that reason obviously it is going up. Okay, so just be careful with those kind of things. And then 40% the following year in 2025. In terms of revenue, you can see 2.68 billion. Okay, 3.26. So there's not massive jump. So 21%, 18%. If you just focus on the first three. So in terms of price wise, not much, but it's good. So, okay, 15% minus 15% this year. So this year, a lot for these companies, semis basically is a kind of write-off, and then after that they should bounce back. Now, before I finish the video, I'm going to show you from a Sharia compliance side of things. Okay, you can pause the video. As you can see, every single one of these companies seems Sharia compliant right now. NXPI basically right now is has the highest interest-bearing debt, so you have to be careful with that. But the rest of them are kind of, just double digits, and so it's not really as much as that one. There you go. So that's the 5 companies that I wanted you to have a look at today. Again, this is not financial advice. Do your research, find out if these companies are good buys for your portfolio. Again, just to be transparent, I do own these 2 companies in my portfolio. Just to quickly show you, AstraZeneca, I own 21.4 shares of this company, and obviously I do also own Public Storage there, about 13.3 shares of this company. And I will be continuing to basically be transparent and honest with you guys. So if you haven't liked the videos, please do so already. Join us on the Discord where you get access to all of these things, inshallah, and the Patreon account. Okay, for that £5 you get access to all of this and the Discord, inshallah. Have a wonderful day. Assalamu Alaikum.